I say, in retrospect, it seemed obvious. The deal was too complex. It was too ambitious. I dare say, and hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. And of course, I am referring to the BHP deal, which ended with, to quote T.S. Eliot, more with a whimper than with a bang. You know, and we'll get into the story in detail, but it seemed like Anglo just said, you know what, you're out of time, too bad. Okay, moving on. That's kind of what it seemed like to me. I don't think BHP really, I think they were kind of taken by surprise, and all of a sudden I think Anglo, how it just kind of suddenly ended after all the talk of BlackRock, extending the deadline, maybe, things were going to happen here. And it seems to me that when Anglo saw the opportunity to just kill the entire thing and just say, you know what, it's over and see you later, they took their opportunities. So kind of an interesting ending. It never seemed possible to me. And again, very easy to say in retrospect. It just seemed like it was a bridge too far for the politicians in South Africa during an election for them to allow, you could argue, their crown jewel in the mining sector to be taken from them. It is not the climate for that. Honestly, I am mystified at what Mike Henry, the CEO of BHP, was thinking. Did he really think he would be able to walk away with Anglo American in this environment? I assumed they were looking at the valuations and just thought that, it's something they could have pulled off and, we offer a little bit of a premium and we walk away with these incredible, copper assets, which the world needs, et cetera, et cetera. But there's just no appetite. And anybody who's following the, news in Africa, there is zero appetite for anybody selling off their assets, as we saw in Canada with Teck Resources. And it doesn't matter if the assets are in a foreign country, as we saw with Teck. It doesn't matter if Anglo American's main copper assets were in South America. In a sense, that's not the point. Nobody wants to let go of any of this stuff. And on a very basic, common sense, pragmatic level, the person on the street doesn't want their wealth in the ground taken from them. It's an emotional issue, which just makes me kind of surprised. I would even say, had BHP and Anglo been able to convince South African politicians that this was a good idea and that this was somehow in South Africa's interest, had they been able to do that, I would argue they would still be facing issues over in Chile and Peru. Again, I wonder, it seemed like a deal out of another era, I would argue. The world can feel free to disagree with me here. I don't see anybody else saying this. But again, this feels like a deal, pre-COVID, right? I mean, this seems like a deal that came out of the 2010s. Like, if we only, bid 10 or 15% above the stock price, they're going to do that. They're going to go for it. This isn't the environment we're in right now, I would argue. And I think the fact that the problem just kind of went away without much protesting from almost anyone and more relief than anything, I think just shows that, BHP, I just feel like they weren't reading the tea leaves of the situation out there. Nobody is interested in selling their metals right now. Anybody that knows anything about the mining sector doesn't feel like we've topped out at copper at $5.18. Does anybody feel like we've topped out of gold at 2,450, whatever the high was over there? Does anybody feel like silver has topped out and now we want to sell off our assets? This is not the time that anybody that, has any instinct for financial markets wants to sell their metal. So again, I just think, we'll offer a 15% premium and we're going to walk away with this stuff. Seems like fantasy land. What politician in today's world is ever going to go for that? As someone was pointing out that I recently was watching, there are no free traders left. You look at the Democrats and the Republicans in the U.S., where are the free traders? It's like Rand Paul. So in that environment, with free trade, out of style, do you think you're going to offer 15% and walk away with Anglo-American, an institution in South Africa? You could argue their crown jewel, a cultural icon when you look at the history and, frankly, just the scale. A multinational. Is Australia going to allow, BHP to be sold off to Rio Tinto? I mean, it's a fair question if you reverse the role here. If Anglo-American had a higher capitalization, would Australia allow BHP to be sold off? I mean, it's, again, maybe it's just me, but this seems like total fantasy land. All to say, it seems to be headed off at the pass here. So we're going to get to the elections in a second, but let's just kind of finish up here. Let's tie the bow on BHP. We have a few stories here. We can't go into all of them, and many of you will already know this news, but I'll start with the May 29th headline from Cecilia Jamasmi at mining.com. BHP walks away from proposed $49 billion takeover of Anglo-American. So that is the headline. We all know it now, and we'll just read some preliminaries. So just a couple of paragraphs here. BHP has withdrawn its proposal to buy Anglo-American after the takeover target rejected early on Wednesday the world's largest miner's request to extend talks, and said that while it believes its bid was compelling, the company is committed to a disciplined approach to mergers and acquisitions. And we have a quote from BHP CEO Mike Henry, who said in a statement a few minutes before the deadline last Wednesday, quote, BHP will not be making a firm offer for Anglo-American. While we believe that our proposal for Anglo-American was a compelling opportunity to effectively grow the pie of value for both sets of shareholders, we were unable to reach agreement with Anglo-American on our specific views in respect of South African regulatory risk and cost, end quote. Anglo said after markets closed, the company had set out a clear pathway to accelerate delivery of its strategy and to unlock significant value for its shareholders. Quote, our shareholders will benefit from value transparency and undiluted exposure to a simpler portfolio of world-class assets, end quote, Chairman Stuart Chambers said. Anglo's refusal earlier in the day argued that BHP had failed to address its concerns over the, quote, highly complex and unattractive structure, end quote, of the proposed deal. Analysts had warned that Anglo's denial of BHP's requested deadline extension indicated the mega deal was likely to be cancelled. RBC said in a note to investors on Wednesday the proposed $49 billion takeover structure is too complex for BHP to go hostile. Quote, if BHP doesn't launch a formal bid, it will be barred from buying Anglo for 6 months unless a competing offer emerges, end quote, they wrote. So that is the initial story. And then we got a story the next day from Reuters on May 30th. Investors relieved BHP walked from $49 billion Anglo takeover deal. And these are BHP investors, and I could understand that because in a sense, BHP is in great shape, you could argue, right now. They're the world's biggest miner, and metals are looking great. So let's read a bit here. BHP Group investors welcome the top global miners' decision to walk away from a $49 billion plan to take over Anglo-American, which rejected 3 proposed offers from its bigger rival over the past 6 weeks. And here's a quote from Andy Forster, Senior Investment Officer at Argo Investments, which holds BHP shares. Quote, it was one of the best opportunities out there for them, and it was always going to be hard to complete. I applaud them for showing discipline, end quote. BHP's timing was good, but the complexity of the deal requiring demergers and a copper price rally made it difficult to execute, Forster said. And we have another quote from Matthew Haupt, lead portfolio manager at Wilson Asset Management, a BHP investor, who said, quote, I don't think it reflects badly on Mike Henry and BHP. It was an opportunistic bid and one that made a lot of sense, end quote. And, to be fair to Mike Henry, I don't know if this costed them anything other than the research. And in that respect, sure, why not take a shot, throw a dart in the dark and see if you hit a bullseye? I mean, sure, why not? And a couple more quotes here. Pendal Group portfolio manager Brenton Saunders said, quote, as investors, it wasn't obvious that the proposed deal was very accretive. Yes, it would bring more copper to the portfolio, but depending on why they paid for it, it's not necessarily accretive to the share price. And finally, we have John Milroy, a private client investor at Ord Minnett, who said, quote, clearly they remain acquisitive and will be sifting through their other targets for building out the copper portfolio, end quote. So it doesn't seem like anybody is overly sad anywhere. Here's another headline that came out also on May 30th. This is Reuters via mining.com. Anglo starts formal divestment of coal, nickel after rebuffing BHP, CEO says. And here's a quote from Anglo-American Chief Executive Duncan Wanblad, who said, quote, we are now starting the formal processes for the divestment or the demergers of these businesses. Coal and nickel will be the first, and then there will be regulatory processes associated with those, and then the demerger of Amplats, and then the De Beers process to follow on completion. And the final story here, also coming out May 30th, this is Reuters via mining.com, how a rattled South Africa became Anglo's best defense against BHP bid. As I was basically just mentioning, it seemed like if anybody was going to stop this deal, it was South Africa, particularly during an election. Let's read a couple of paragraphs here. Days after miner BHP launched its takeover bid for rival Anglo-American in April, the CEOs of both headed for South Africa, where a condition to divest Anglo's local platinum and iron ore assets was causing a political storm. While Anglo CEO Duncan Wanblad appears to have so far succeeded in enlisting support for his new turnaround strategy, the trip did not work out as well for BHP, which had been caught on the back foot by details of the offer being leaked. And maybe, again, to be fair to Mike Henry and BHP, this might have been a big part of why things got tripped up. It was the leak of this information. They probably never expected this to get, leaked out in the way that it was. Let's continue here. After it bowed out of the deal on Wednesday, more than half a dozen people, including investors and ex-mining executives, told Reuters that Anglo was able to rebuff BHP's approaches because the bigger group could not persuade key shareholders, including South Africa's Public Investment Corporation, to back it. Quote, it's a combination of a structure that would have been extremely challenging to implement, which has significant risk embedded in it and lack of sensitivity to the environment in South Africa, end quote, said one source familiar with Anglo's defense strategy. Quote, all of which, by the way, could have been anticipated, end quote. And finally, in his first public comments on the takeover bid, BHP CEO Mike Henry told investors at a mining conference in Miami that, quote, our strong preference was to be able to hold these discussions with Anglo in private. Rather unfortunately, it got leaked, so the first thing I did was jump on a plane, end quote. So this seems to be why this looks like a bit of a fumbling of the football, and why it seemed perhaps, to my earlier comments here, why perhaps this just seemed like, why on earth would you ever think you could get away with this? I suppose Mike Henry thought, okay, there's nothing wrong with holding talks, and if you can get Anglo-American on side, then maybe you're able to persuade the politicians in South Africa that, this is maybe a unified company and all that. And final quote here, BHP's calculations underestimated the company's deep ties to South Africa, said Mandy Dungwa, a portfolio manager at Camisa Asset Management in Cape Town. Quote, there's just a certain way these deals are done, particularly in South Africa, with the sensitivities government has, especially when it seems you want to take something away, end quote. As I was saying earlier, anybody who is following the news in Africa knows there is absolutely zero appetite for a Western company to come in and buy your metal assets and take them, and perception is reality. And to do that within the context of an election, if you're, the governing party and you say, yeah, that's a good idea, like be ready to be voted out of office on that issue alone, it strikes an emotional chord, these resources, particularly in Africa, I would argue, where they feel they have been taken advantage of. And by the way, Nigeria is now basically demanding that anybody who wants to export any of their metals has to process locally, following the lead of Indonesia and other countries that we've been listing here. So just to give another kind of sense on the landscape here. Now, moving to this election, we have a story here from miningdigital.com South Africa mining sector holds breath on nationalization. This is Sean Ashcroft. So there was the election, and the ruling African National Congress, or ANC, lost its majority for the first time in 30 years. And as the article says here, this leaves the country facing the prospect of being governed by a coalition between the ANC, ruling alongside either the far-left Economic Freedom Fighters, MK, run by former President Jacob Zuma, or the liberal-minded Democratic Alliance, or DA. South Africa watchers say the prospect of left-wing influence could be a concern to mining companies because of the fears mines will be nationalized, prompting investor exodus. Conversely, the presence of the DA in a coalition government, the Democratic Alliance, would be welcomed by the mining sector because the DA has pledged to encourage investment and is opposed to state-owned mining companies. So, if anything, the appetite, rather than wanting to sell off its assets, if anything, the threat is towards nationalization, just to show how little appetite there is for selling off these assets to a foreign entity. And now we have another election in a major mining country, and that is in Mexico, where we just got a result. This is Colin McClellan at the Northern Miner, new technocrat Mexican leader, unlikely pro-mining, even as she replaces whim and bombast. So, interestingly, a climate scientist has won Mexico's election. So let's look at the story here. Claudia Sheinbaum, a climate scientist, won Mexico's election to become the country's first female leader and is expected to continue the anti-mining policies of outgoing President Andrés Manuel López Obrador. Sheinbaum secured the most ballots on Sunday in the nation's 200-year democratic history, as much as 61% of the vote, according to a sample count by the country's electoral authority. Amazing. The tally also predicts her coalition of parties will secure 2/3 of both houses of Congress, allowing it to change the Constitution without the opposition's consent. Incredible. Quote, the country's security situation and rising fiscal deficit, coupled with strengthening of the Mexican peso, will represent critical challenges for her presidency, end quote. Colin Hamilton, BMO Capital Markets Director of Commodities Research, wrote in a note on Monday. He continued, quote, from a mining perspective, it is unclear whether this will mean any lifting of restrictions such as the de facto ban on new open-pit mines, though we would see this as only a possibility rather than a probability in the near term, end quote. Sheinbaum, a former mayor of Mexico City who has cited López Obrador as her mentor, campaigned on a platform of affordability and promises to tackle corruption. The election saw the murders of 37 candidates as drug cartels seek to control political outcomes. That is astonishing. I'm just going to repeat that. The election saw the murders of 37 candidates as drug cartels seek to control political outcomes. So, new leadership in Mexico, the crime there is just unbelievable. So, all to say, the news in this industry continues to turn heads here, including mine, who is deeply involved here. You can read the whole story on northernminer.com. It is still on the front page. So with that, we have a wonderful show ahead of us. William Sheriff from enCore Energy is going to share his history of being involved in the uranium industry since 1986. As we discuss in the interview, most people are familiar with uranium from the historic and famous bull run from 2004 to 2007, where uranium went from $8 to something like $128 a pound. And we get into that as well, but William also shares what things were like before that bull run, being in the uranium industry, as well as his thoughts on what is happening now. We discuss Russia and the geopolitics of uranium, including the recent ban of uranium imports in the United States to be enacted, I believe, around 2027, 2028. So that is coming up, a super interesting interview from really someone that's spent a career in the uranium industry. So there's nothing like someone that has not only knows the history, but has lived it. So a wonderful interview with William Sheriff, founder and executive chair of enCore Energy. Coming up for this week's CEO Spotlight, we also have Adrian O'Brien, who is the director of marketing and communications for Midnight Sun, which is working in Zambia, one of the hottest areas in the world, on a copper project. So a lot to look forward to here today, a very topical show on what is happening in copper, uranium, and the mining industry. So with that, if you want to find us online, you can find us at northernminer.com. You can find us on Twitter at Northern Miner, and on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including SoundCloud, Spotify, and Apple Podcasts. And with that, let's turn to Adrian O'Brien, Director of Marketing and Communications for Midnight Sun Mining, for this week's CEO Spotlight. Joining us today, I'm very pleased to welcome for the first time to the Northern Miner podcast, Adrian O'Brien, Director of Marketing and Communications at Midnight Sun Mining. Adrian, welcome to the show.
A real pleasure. Thank you so much for having us on here. This is awesome.
Well, it's an absolute pleasure to have you on. And I mean, Midnight Sun Mining is working in Zambia, which is one of the most exciting places really in the mining world right now, I would say. We talk about the Copper Belt all the time, or what's going on in the Democratic Republic of Congo and Zambia. And so there's just a lot of excitement there. So for those that haven't heard about Midnight Sun Mining, could you give us a little bit of background on the company and basically what you guys are up to?
For sure. So the easiest way to explain it would be, company's been around for a long time. And of course, the name Midnight Sun doesn't sound necessarily like we would have an African project. When the company was first founded 12 or 14 years ago, they were chasing gold projects in the Yukon, which totally explains the Midnight Sun name. And as time went on, they were given an opportunity to get into a copper project in Zambia, which was the Solwezi project, which we're now working on. And, this is 12 years ago, low copper prices, tough time to be doing anything, not as much interest in Zambia, and really an area that only majors were playing. This was an area dominated by majors, an area that majors were working, but our team kind of had the foresight to take the opportunity and get into this belt before anybody else was really aggressively going there outside of the 2 or 3 majors that were operating. So, we've been there all this time and we've stuck it out through really tough copper markets, lack of interest in African countries, and a lot of other, market adversity. And now all of a sudden we have a project in the top place in the world to be exploring for copper, an area where basically the biggest copper deposits in the world exist, and a rising copper market. And it seems that the market has come around now to where our timing is nearly perfect.
Indeed. Again, it seems to always be in the news. And I could just imagine a few years ago, people seeing, Zambia and just thinking, okay, not my jurisdiction for mining. So bring us up to date then. What are you guys up to then there in Zambia? Are you drilling? What's going on at the Solwezi project?
So there's a number of things going on. We actually have 2 major programs underway, if you will. We have 2 deals in place, 2 major programs underway. And just to sort of set that up and explain it really clearly, if you can imagine our property, very, very large. It's over 506 square kilometers. But unlike a lot of the other deposits in this belt, ours has underlying geological structure that basically created 4 separate systems. And so if you divided the property in 4 pieces, each one of those pieces represents an opportunity for one of these billion-ton transformative discoveries. And because of that, we basically split it up and looked at how do we develop these as independent targets and go about that in a way that gives us, the most possible upside, the best upside for our shareholders, and the most opportunity for things. So the first thing that we announced back in February was a deal with Kobold Metals. And so we've done a $15.5 million earn-in on one of our targets called Dumbwa. And we can go into detail about Dumbwa in a minute, but just to give you a quick insight as to what we're going to be doing, we focused in on Dumbwa with Kobold. Kobold's going to spend $15 million in exploration, which is going to be basically entirely drilling. We've done lots of geophysics and geochem and everything. So really we're at the point now where this is a drill ready target. And so Kobold is working with us on Dumbwa. We're going to do a big aggressive drill program this year. That's probably going to kick off in the next 6 weeks or so. And then we're going to work towards defining what kind of structure exists at Dumbwa and whether or not it's what we think it is. And our model for it, Kobold's model for it, is Lumwana, which of course is owned by Barrick and right next door to us on the west side. The geological structure and everything about that from geological signature standpoint seems to be the same thing. So we're super excited about that one. So that's underway. And then we've also announced a cooperative exploration plan with First Quantum. And this one is really, really exciting because it's not very often that companies have a near term cash flow opportunity. And a lot of companies wave their arms and talk about toll mining and things like that. And this is a very, very unique situation that exists only because of our proximity to Kansanshi, which of course is First Quantum's flagship. It's the largest copper producer in Africa, and it is located right beside us. It's about 6 kilometers away. And they have an oxide circuit, an SXEW oxide circuit that is in need of material. And there's a lot of oxide copper material on our property. So we're going to work together to define, whatever scope of resource we can put together and look at how we could get that material into the Kansanshi mine as quickly as possible. So we have this kind of near-term production situation that could play out really, really well for us. That's kicking off in the next 4 weeks or so as well. So that's going to be aggressive drilling, and that's going to be focused on the exact opposite corner of our property up to the northwest. So Dumbwa is down in the southeast, and that area, which is called Kaziba, is up in the northwest. And so two really exciting programs that are really substantial and kicking off right away. So it's going to be a super newsy period for us. It's going to be busy. There's going to be a lot going on. And then heading into the fall, lots of drill results.
That is absolutely fascinating. I mean, correct me if I'm wrong, like, isn't Kobold the Jeff Bezos, Bill Gates backed mining company there with, as you were saying, the Dumbwa project there in Zambia?
Yeah, you're absolutely right. So the Kobold's getting a lot of attention now. When we first started 14 to 16 months ago, started chatting with Kobold, the market hadn't really caught on to who they were and what they were doing yet. But they're really interesting. They're using a combination of traditional geoscience and AI technology that is absolutely bleeding edge. And they're basically applying that to critical metals projects all over the world. And of course, like you mentioned, they're backed by a bunch of really big name Silicon Valley folks. And really that comes through Breakthrough Energy Ventures Fund, which is Bill Gates, critical metals, and I guess as the name says, Breakthrough Energy Ventures Fund. It's for energy related targets. Bill Gates has this fund, whole bunch of people backing it. You've got Jeff Bezos, Richard Branson, Jack Ma, Michael Bloomberg. Unbelievable. And so you have that piece of it, which of course gets a lot of media attention, but they also have the best geoscience team on the planet for this stuff. I mean, they have 200 geoscientists working for them, an unbelievable team. And particularly in the copper space, they've brought David Broughton on as a chief copper geologist. And David is arguably the best SEDEX copper geologist on the planet. It's amazing, super, super talented guy. And he's actually credited with the discovery of both Kansanshi and all the development work at Kansanshi and the discovery of Kamoa-Kakula, which is Ivanhoe's flagship, and that's located just above us in this region. And that thing is 1.4 billion tons at almost 3% copper. Astronomical. So they're really at the absolute forefront right now, and super exciting to be working with a group like that.
Indeed, the excitement level here is 17 with everything that's going on. So what are you guys focused on then? What is the nature of this relationship with Kobold? So you're partnering up, they're kind of helping you and you're helping them because it's kind of a similar kind of area. Is that the idea, or what is going on here?
That's more so the case with our deal with First Quantum. The deal with Kobold is really straightforward, actually. So it's a 75% earn-in on our Dumbwa target. And so, Dumbwa is a really remarkable target, features a 20-kilometer long soil anomaly that runs 0.73% copper. And to give that some context, the average grade of operating mines in this area is about 0.59%. So you're actually getting ore grade copper in soil at surface. And that has obviously garnered a lot of attention. There's also things like vegetation kill zones along that anomaly, which are caused by a large underlying copper sulfide system. And the only two places in the entire Domes region that they've seen that are Kamoa-Kakula, which, as I mentioned a minute ago, is like 1.4 billion tons at almost 3%. And at Tenke, which is also right above us, and that's almost 150 million tons at 2% copper. So the two highest grade deposits in the region had the same signature at surface that we're seeing at Dumbwa. And then where that 20-kilometer long anomaly reaches our southern boundary of our property, it actually crosses over, and a little tiny edge of it goes onto the property below us, which is owned by another major. And they drilled that last year and they hit. So that created a lot of excitement and a lot of buzz. And that led to discussions with a number of different parties, but the deal with Kobold. And so Kobold's going to spend $15 million. There is a cash component. It's about $500,000. So $100,000 a year for the duration of the deal. And the deal's 4.5 years. And they're going to spend $15 million basically in drilling. It's going to be really aggressive. And for that, they're going to earn 75% of that target. But we have 3 other targets that are virtually the same thing. And those remain with Midnight Sun 100%. So, very straightforward. But the belief is that we have a big system here. The model that we're using is Lumwana, which is next door to us. That's 1 billion tons at 0.55%. And geologically speaking, that's the analog that we're using for how we're going to develop this target with Kobold. But Kobold's running the program. David Broughton, I mentioned him a moment ago. He's leading the way, and we couldn't be happier. So we can kind of let them do their thing and hopefully find us a 1 billion ton deposit.
So as we wrap up here then, Adrian, what is the roadmap briefly? Like, where is this all going? How do you see things playing out in the next, 6 months to 2 years?
Well, I think realistically for us, we have a 4-year run at Dumbwa with Kobold, and that's significant. It's going to create a lot of news, a lot of buzz, and success there. It's one interesting thing about the area we're in, the Domes region. Every deposit around us is 1 billion tons. So what you're searching for with any of these targets is very, very large. So for us, the plan is to let Kobold do their work. Obviously, we have some involvement geologically as well, but we're going to let them lead the way, put their expertise to work on this target. And in the meantime, we're going to be working with First Quantum on our plan at Kansanshi. And just to really quickly describe that, First Quantum has, I guess, what you would call the most efficient copper smelter on the planet at Kansanshi. And they have 3 circuits. And their copper smelter produces about 1.2 million, give or take, 1.2 million tons of sulfuric acid a year. And they use that sulfuric acid. They have to get rid of it somehow. It's an environmental liability. And so they use oxide copper, which they find at surface, to neutralize that sulfuric acid. And they basically heap leach that material. But what that also does is it opens up a really robust revenue stream for them that makes somewhere between 2 and 400 million a year as a sideline to their main sulfide copper production that they're doing. And so they have now depleted their supply of oxides. They're looking for more. And the only source in the area is our property. And so we're working together to develop different areas of our property that have a lot of oxides, which we've already intercepted in drilling. So we're working on that aggressively with First Quantum. We're going to be drilling nonstop on that. We're going to start at Kaziba in the next few weeks. And so what you're going to see is this 2-pronged attack, developing this big, hopefully 1 billion ton target with Kobold. And at the same time, developing this near-term cash flow situation with First Quantum. And if everything goes to plan with our work with First Quantum and this cooperative exploration plan, we could be looking at something where we're feeding material to Kansanshi as quickly as 12 months from now.
Amazing. So boiling it down for us in a couple of lines, if you can, what is your message to investors?
There are only a couple of places in the world that you can find deposits that are big enough to make a dent in the upcoming copper deficit that's about to hit. Really, if you're looking at projects around the world, the low-hanging fruit has been picked. Copper porphyry deposits that are being found now are expensive, they're deep, they come with a capex that most juniors will never get off the ground. This area that we're working in, the Domes region, is arguably the top place in the world to be working based on the size of the deposits, the type of deposits, which is SEDEX, and how quickly they can be brought to market. So when you're comparing that to other projects around the world, we have 4 opportunities for one of these 1 billion ton transformative copper deposits and a near-term cash flow situation with material that basically sits at surface on our property. So pretty remarkable 2-pronged opportunity here.
Adrian O'Brien, Director of Marketing and Communications at Midnight Sun Mining. Thank you for joining us on this week's CEO Spotlight. And thank you once again to Midnight Sun Mining for sponsoring this week's episode of the Northern Miner Podcast. Turning to the website, a story here from Reuters via mining.com. LME brand approval cements Indonesian nickel ascendancy. So Indonesia is putting out a certain kind of nickel, and the LME, which is owned by Hong Kong Exchanges and Clearing. It's always important, I think, to mention this. Back to our story here. So Indonesia is putting out a special kind of nickel, and now that contract has been approved by the LME. Here is the story. The London Metal Exchange has approved the listing of the first ever Indonesian brand of refined nickel. DXZWDX isn't the most memorable of historical markers, But the new brand's inclusion on the LME Good Delivery list represents a watershed moment for the global industry. 5 years ago, Indonesia produced just 600,000 metric tons of nickel and shipped most of it as unprocessed ore to China, where it was alloyed into stainless steel. Last year, the country mined 2.03 million tons of contained metal, so over 3 times, accounting for over half the world's production. It now exports a spectrum of nickel products, including refined metal of a purity acceptable for LME delivery. For Indonesia, it's a vindication of its policy of forcing miners to move downstream by banning ore exports from 2020. For the LME, it's a welcome liquidity booster as it looks to rebuild its nickel contract after the crisis of 2022. For everyone else, though, the conversion of an Indonesian production power to market power may be more problematic. Indonesia's ban on the export of unprocessed ore didn't go well with other countries. The European Union won a case against the country at the World Trade Organization in 2022. President Joko Widodo shrugged off the ruling party with an quote-unquote, "it's okay." An appeal was swiftly lodged. The export ban remains in place. I don't think Indonesia is going to care. It's back to this idea that these metals in the ground, resources in the soil of a country, are thought to belong to that country, particularly if the metals are in that country, I might add, because sometimes we even feel it, as we did with TAC over in Canada. We even feel emotional connection to the metals owned by a Canadian company that exists in South America. So imagine those metals are in the country, and then you have some external force saying you can't do what you want with those metals. You have to do XYZ. Nobody is buying that. Let's continue here. Although controversial, the policy has been undeniably successful. So it's been undeniably successful, and then what do countries like Indonesia think when they see the WTO and the EU fighting against them? Fighting against this success, not only in terms of outright nickel production, but also in terms of product mix. Nickel producers, many of them Chinese, have worked out how to convert Indonesia's relatively low-grade nickel resource into forms of the metal that can be used in electric vehicle batteries. The new DXZWDX brand, grading a minimum of 99.8% pure nickel, is the culmination of that technical evolution. Other operators will likely follow as Indonesia's relentless drive to capture an ever greater part of the battery materials value chain rolls on. So, interesting development there with the LME. Especially with a WTO ruling, it's like nobody cares what the WTO is saying, including the LME, interestingly. And can you blame Indonesia for not caring? Continuing on, Indonesia to issue copper export permits for Freeport and Amman. This is Reuters via mining.com. Indonesia will issue copper concentrate export permits for miner Freeport Indonesia and Amman Mineral International, a trade ministry official said on Friday. So this was written on May 31st, ensuring that exports by both companies would not be disrupted. Freeport and Amman's current export permits expire on Friday. And we have a quote from Budi Santoso, the Trade Ministry's Director General of International Trade, who said, quote, "The permits will take effect from June 1st, end quote. Budi said both companies will be permitted to export until December 31st. Indonesia banned shipments of all raw materials from June 2023, but Freeport and Amman were given a year-long dispensation to export their copper concentrate to allow the miners more time to finish the construction of their smelters. Both companies have since lobbied the government for another extension, arguing that their smelters would not reach full capacity by next month. Amman has started commissioning of its smelter, and the production of the first batch of copper cathodes is expected in the second half of 2024, the company said in a statement on Friday. On May 8th, President Joko Widodo said the government would extend Freeport's and Amman's export permits, but did not provide details. So interestingly, then on June 3rd, we have a story from Reuters via mining.com. Freeport Indonesia raises output target, awaits new export permit. So they haven't got their export permit yet. It sounds like they've been given verbal confirmation, but they haven't actually got the piece of paper in their hand. So interesting development there. So continuing on the nickel front, Nornickel forecasts lower global nickel surplus, bigger palladium deficit. This is Reuters via mining.com. Russian mining and metals giant Nornickel on Thursday lowered its forecast for the global nickel surplus this year, but said it expected a bigger global palladium deficit. Nornickel, the world's largest producer of palladium and high-grade nickel, said it expected the global nickel surplus to be about 100,000 metric tons this year, down from a previous estimate of 190,000 tons. Most of the surplus would come from low-grade nickel, it said. In 2025, the nickel surplus would remain at the level of 100,000 tons, Nornickel said in a report, and here is a quote from the report. Quote, growing nickel demand from the smelting, stainless steel, alloys and specialty steels, and electric vehicle sectors will be offset by both the commissioning of new nickel production capacity in Indonesia and increased supply of nickel metal and chemical compounds, end quote. Nornickel, whose share in palladium production exceeds 40%, revised its market forecast for the metal for the current year and said it expected a global deficit of 0.9 million ounces compared to a previous estimate of 0.4 million ounces. The increased deficit was due to lower than expected secondary production, it said. In 2025, it forecasts the palladium market deficit to fall to 0.3 million ounces. Continuing on, Russia said to seek French-held uranium assets in Niger. And of course, we're going to discuss uranium in our feature content with William Sheriff, who again has spent a whole career in the uranium sector. This is Bloomberg News via mining.com. This actually came up briefly. Russia is seeking to take over uranium assets in Niger held by a state-controlled French company, according to people informed about the matter, in a further challenge to Western interests in Africa. Rosatom, Russia's state nuclear company, has had contracts with Niger's military-led authorities about acquiring assets held by France's Orano SA, according to a person in Moscow familiar with the matter, who asked not to be named because the discussions are private. A Western diplomat based in the region said talks were likely centered around mining permits. Niger accounted for about 4% of global uranium mine production in 2022, according to the World Nuclear Association. And scrolling down a bit, we have a quote from Mark Hibbs, a Berlin-based nuclear analyst with the Carnegie Endowment for International Peace, who says, quote, Russia has been stepping up its economic, diplomatic, and military links in Africa, including after the Niger coup, and they see this part of the world as a strategic investment opportunity. Hand in hand, Rosatom has been diversifying its uranium investments in Africa. End quote. Kind of reminds you of the Barrick Mali story a little bit, doesn't it? Listen to this, just finally on this article. Orano is unaware of any discussions between Niger and Russian entities, the company said in emailed responses to questions. It has continued to engage with Niger's new leaders since July, Orano said. Niger Prime Minister Ali Mohamed Lamine Zain's office declined to comment. Spokespeople for Rosatom, the French presidency, and the Kremlin didn't respond to requests for comment. So we will take an in-depth look at uranium and the situation in this week's feature interview with William Sheriff. Continuing on, Russia proposes raising extraction tax rates on diamonds, gold, and iron ore. This is Reuters via mining.com. Russia's finance ministry on Monday proposed increasing mineral extraction rents from next year on diamond, gold, and iron ore mining, changes that could boost tax revenues by 230 billion rubles, which is $2.59 billion from 2025 to 2027. The government last week approved tax hikes for companies and wealthy individuals that could add an extra $30 billion to next year's budget revenues and will allow Moscow to further ratchet up spending, including on the conflict in Ukraine, without compromising fiscal stability. So interesting development there. Just a headline here, De Beers ditches lab-grown diamonds as it looks beyond Anglo. You know, one of the biggest things to happen in the diamond industry in the last 10 years easily are lab-grown diamonds. And just a quote from De Beers CEO Al Cook, quote, "We know how to do it and we're coming back. All of this comes together under a big theme of differentiating natural diamonds from lab-grown," end quote. I'm not sure it's going to work. I mean, I remember hearing this argument, years ago. Diamond mining executives who I interviewed and saying, we're going to make this huge distinction between organic and synthetic diamonds. And I just don't think it's going to work. I mean, to be perfectly frank, I think people under 30 would prefer the synthetic diamond over the, what they would probably consider to be a blood diamond that was organic. So just a couple of more paragraphs here. Synthetic diamond prices have now collapsed, though how much of that is down to De Beers and how much is because of a flood of new supply is open to debate. This undermines the logic for De Beers' venture, with wholesale prices of lab-grown diamonds now lower than those of Lightbox, which were well below the going rate when first introduced. Still, while synthetic diamond prices have collapsed, they've caused significant collateral damage. Natural stones used in cheaper 1 to 2 carat wedding rings have tumbled under pressure from synthetics and have so far shown little sign of a sustained recovery. Few headlines as we wrap up. China to build $1.5 billion copper smelter in Kazakhstan. That is by Colin McClelland at the Northern Miner. So China is building a copper smelter in Kazakhstan. Very interesting. Continuing on, we have a mining.com headline. Lithion completes battery metal extraction plant construction in Quebec. And this is by a staff writer at mining.com. And it says the build marks the first lithium-ion battery critical mineral extraction plant in North America's Northeast, the company said. So Quebec, once again, on the forefront of mining and processing here in North America. Another headline, Rio Tinto marks 70th year of operations at British Columbia's only aluminum smelter. That's a staff writer at mining.com. So 70 years in BC for Rio Tinto. That is quite a legacy. Another headline, Taseko halts BC copper mine Gibraltar as workers strike. This is by Cecilia Jamasmi on mining.com. More than 500 workers went on strike over the weekend at Taseko Mine's Gibraltar copper operation in central British Columbia following unsuccessful contract negotiations. And Taseko is alleging that Unifor, the union, quote, refused to negotiate basic terms of a new collective agreement. And continued, the company remains committed to the bargaining process and reaching a fair and equitable agreement. Interesting story there. And final headline, German coal company to get about $1 billion for shutting mines. This is Bloomberg News via mining.com. Those are your news stories. Now let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.41%. That is 0.06% lower than last week. The UK 10-year gilt is yielding 4.23%. That is 0.01% lower than last week. And the Italy 10-year bond is yielding 3.89%. That is 0.01% higher than last week. So UK and Italy 10 years almost static, while the US 10-year bond is slightly lower at 4.41% after a pretty quick rise above 4.5%. Turning to precious metals, gold is trading at $2,367.80 per ounce. That is $21 higher than last week. Silver is trading at $30.67 per ounce. That is $1.12 lower than last week. Platinum is trading at $1,023 even. That is $42 lower than last week. And palladium is trading at $927 even. That is $69 lower than last week. And interesting within the context of that Nornickel story talking of a massive palladium deficit. Turning to our industrial metals, copper is trading at $4.67 per pound, so continuing to fall. And that is 16 cents lower than last week. Iron ore is trading at $117.52 per metric ton. That is 14 cents lower than last week, so almost even. Aluminum is trading at $1.21 per pound. That is unchanged from last week. Lead is also unchanged at $1.04 per pound. Nickel is lower at $8.84 per pound. That is 37 cents lower than last week. Tin is also lower at $14.99 per pound. That is 8 cents lower than last week. Cobalt is unchanged at $12.32 per pound. Lithium is also unchanged at $14.56 per kilogram. Uranium is slightly lower at $88.60 per pound. That is $3 lower than last week. And zinc is also lower at $1.33 per pound. That is 6 cents lower than last week. Zooming out, metals basically taking a breather and edging lower, taking a break from the fairly substantial rally we've seen here. Gold, interestingly, bucking the trend, being higher, whereas almost all metals are basically the same or lower since last week. But we could argue for those that have run, like copper, still consolidating really recent gains, $4.67 per pound. Not a bad price if you're a copper miner these days. And those are your metal prices. Coming up, I'm very pleased to welcome William Sheriff, Executive Chair and Founder of enCore Energy, back to the Northern Miner podcast. We go in depth on William's experience being a uranium mining executive all the way back in 1986 and how things have changed, where things are, the geopolitics of uranium, and Russia's interesting role over the years. It is a fascinating discussion. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner podcast, William Sheriff, Executive Chair and Founder of enCore Energy. William, welcome to the show.
Hey, very good to be back. Thank you.
Last time we talked, I found you had a remarkable, very interesting story and background in the uranium business. And of course, uranium has had a pretty interesting, 12 months, I would say. After a very long in the doldrums, you almost felt like a decade there, market in the doldrums. So, just for the listeners as well as myself, how did you get involved in the uranium business? How did you get started? And kind of, just generally, what have you been doing in the uranium business?
Sure. Well, a little bit of background. I'm a geologist by education. Spent quite a bit of time in the financial markets as a stockbroker, market maker, et cetera. But started out in molybdenum, worked in gold quite a bit. And in 1986, I had the opportunity to buy the Union Carbide database covering their extensive mineral searches for all the commodities around the world. And, at the height of my interest there was uranium. There was a number of projects that had been developed that were at the doorstep of possible production back in the 70s. So that's what got me interested. Became involved with a few projects that I picked up myself and leased out to a number of smaller companies during the next decade and a half, almost 2 decades. And then in 2004, I saw what was a complete and total capitulation in the uranium market. We were down to about $7 a pound. And you were seeing companies writing off their assets ahead of when they expired. That is, leases that would expire, they were giving up early, claims they were giving up early, and didn't know when it was going to go back up, but I did know that was the bottom. So I threw every asset I had at acquiring mining claims in the U.S. And a short period of time later, I met Paul Matisic. We started Energy Metals Corp. And had a 1.7 million market cap in the summer of 2004 and sold out in late 2007, early 2008 for 1.8 billion. And it was a meteoric rise, but we had everything timing-wise done perfectly well, and very fortunate on the timing all the way around. But that was all driven primarily by the Union Carbide database and a few others that I'd picked up since then. So we had the insight of a lot of proprietary data that allowed us to build the U.S.'s largest resource base. I went on to stay on the board of Uranium One after we sold out. And after a couple of short years there and some geopolitical intrigue involving the Russians, that was just a bit more than I had stomach for. I decided to leave and start enCore. So a number of the people that had been with Energy Metals left Uranium One and went with me to start what would become enCore Energy. That was right before Fukushima hit, so our timing was questionable. Fortunately, we were able to finance during the couple of months before Fukushima. And then we had, as you mentioned, we call it the decade of darkness. There wasn't a lot going on. In fact, it gave us lots of time to plan our future. But then in 2019, we saw a sea change coming in the supply-demand metrics, the favorability, general public opinion on nuclear energy, and really viewed it as a renaissance of what ended at 3 Mile Island in 1979. And at that time, there were over 300 reactors planned for the U.S., a worldwide boom in uranium. And I think that's right where we are now. We just cut the intervening 44 years out. So by 2023, it was really quite clear that's where we were going, 2022 even. Can't get to zero carbon without nuclear power. It's that simple. And it is not a perfect solution, but it's the best we have available. People like electricity. Obviously, the world's being electrified at an amazing pace, and just can't get there without nuclear energy. So enCore was able to pick up 2 of only 11 licensed plants in the U.S. for in situ production of uranium. And we aren't really miners. We move water and fluids containing uranium as opposed to rock, so our costs are competitive with some of the best mines in the world. And yet we are not regulated by mining authorities, so our permitting is much quicker, reclamation much easier, et cetera. Since we got going, we were able to bring in and augment our team. We're now up to about 115 employees, an all-star board, qualified operators with great experience in the uranium in situ business, all the way down to supervisors in the field. And just really put together a great team and have added a third plant. So we now own 3 of the 11 that are built and constructed in the U.S., all in South Texas, which is a remarkable place to work. Our permitting timelines are second to none there. Cost of production is favorable when compared to anywhere else in the U.S. just due to the warm weather, not having to worry about freezing conditions, et cetera. So that in a nutshell, maybe a big nutshell, is the history of my involvement with uranium.
I mean, it sounds like a career in uranium to a certain degree. And I'm kind of curious, like you mentioned that in 2004, you saw a bottom. And did you say you were involved as early as the 1970s in uranium?
No, 1986 was when I bought Union Carbide's World Vials. Yeah.
Okay. And just out of curiosity, because we hear about that kind of legendary bull market from, say, what was it, 2004 to 2007, if I'm not mistaken.
That's right.
I found out from being a subscriber to the Dines letter, which I'm sure you've heard of, just being in the uranium business. But I'm just kind of curious, like pre-2004 and back in like the late 80s, I mean, I would say it was very contrarian back then. I mean, you had Chernobyl. I mean, what was it like?
Well, the early 80s, I wasn't involved. I was still in school in 1980. But, 1980 was the last big boom year. 3 Mile Island was 79. The U.S. In particular, but a lot of the world got very good at finding uranium deposits. And in 1980, the U.S. was self-sufficient for a brief period of time. We produced over 40 million pounds a year. Right now, we need 45 to 50 million, generally pegged at 47 or 48 million pounds a year that we consume. And, we had 22 conventional mills operating in 1980. Now we have 1 operating intermittently, and only 3 in existence, only 1 of which is operational, plus the 11 in situ plants, of which probably about a half of them are operational or in operational condition, with I think 4 of them actually in production now, or 3. So it's really an industry that time has passed by and now is at the forefront of our energy needs going forward. So there's rapid expansion, lots of capital coming in, and clearly that favors the folks that were in place prior to this starting. You did mention the 04 to 07 timeframe when uranium prices went crazy, and it's really the only reference point for most investors. I would point out that market had absolutely nothing to do with the market we're in now. That was a supply interruption market at a time of really, quite frankly, shrinking requirements. Countries were shutting down their reactors. The U.S. government was selling 8 million pounds a year into the market. What we had there was a perfect storm of supply interruption, starting in as early as 2003 with, floods at McArthur River, and one of the biggest mines in the world. And Cigar Lake actually had 3 floods, although commonly referred to as 2, since 2 of them occurred 5 days apart from each other. But that was to be the saving deposit to come online, and it was delayed. And then at the same time, I think it was 2007, you had Ranger, ERA's big open pit mine in Australia, flood due to monsoons. And at the time, you had Rio Tinto Zinc say that Rossing, which was one of the top 4 mines in the world, was going to run out of ore and be exhausted by 2007. Plus, they were having huge health issues with a rampant AIDS epidemic at the time. So against the backdrop of diminishing requirements, the guys still running reactors had to worry about where their supply was going to come. So we got a bit of a panic, moved the market up in the $80, $90 range, and then the hedge funds took over and finished off moving it up to 140 in the now famous spike. You compare and contrast that to the current market, which is entirely demand driven. We've got unsatisfied demand being predicted by the World Nuclear Association without factoring in small modular reactors. And then you start factoring those in a few years from now. And really, we're considerably short of the mark. That's probably most significant in the U.S., or most apparent, where again, we need 47 or 48 million pounds a year. And we produced, 3 years ago, we produced 9,000 pounds. This year so far, we've produced about 50,000. And that's cumulative or total U.S. production. So we've got a long ways to go. This year, it's highly unlikely we'll see 1 million pounds produced this year, maybe a couple next year, but that's still a far cry from the 47 or 48 that we need. And half of that U.S. demand is coming through the port of St. Petersburg. And I don't mean Florida. While very little of that originates in Russia, it all goes through, or the vast majority of it goes through Mr. Putin's ports and is somewhat at his whim as to allowing passage. So it puts us in a very precarious position in terms of our fuel situation. And that really adds to the growing demand and really the potential upheaval in the U.S. If Russia does cut us off. And there's a lot of reason to think that might actually happen.
Indeed. And there's so much to talk about there, and I want to return to it. But just with this pre-2004 period, just one final question on that part, because again, as you were saying, the 2004 to 2007 period is, most people's reference point. So just to kind of just add a bit more color to the pre-2004 era, how difficult was it to be in the uranium business? Like, if you were at a cocktail party, I mean, did you tell people that you were in uranium, or would you be kind of vague about it? Like, how difficult were the politics of uranium pre-2004?
Well, it was always controversial, and that was fed by the media and, hysteria of Hollywood, that sort of thing. But, the simple fact of the matter is nobody died at 3 Mile Island. Fukushima was relatively minor in terms of health impacts. Chernobyl was a dandy. It was, the really only big disaster. But going back into the 80s, quite frankly, there just wasn't much interest in it. Even now, you talk about being in the uranium business at a cocktail party, as you say, and you get a lot of curious looks. We still do that. Well, there's a very big lack of knowledge in the general public, yet an awareness that we need nuclear power. They just somehow don't make that connection on the fuel source. When I first got in 86, I went and acquired a number of properties in the U.S., and there was I think a couple of different junior Canadian companies, Strathmore in particular, that were interested in leasing them. And so I had a number of leases, but, probably at least every other year they'd ask for forgiveness on the lease payment because there was no interest in the sector and they had no ability to raise money. And that really didn't change until 2004. So, 18 years of doldrums.
Very interesting. And so returning to our conversation then on the current situation, we've seen a run up, I'd say, ballpark, we went from about $30 a pound to, let's call it $90 to $100 a pound. How much do you think uranium needs to get to price-wise for the supply-demand fundamentals to, basically be met?
Well, you've got some bigger concerns than the pricing. Most of the in situ operations would be quite profitable at $90. Even some of the conventional ones would be. But what you're up against are other burdens other than economics. So permitting timelines for, nuclear projects in Canada, for instance, which is, generally viewed as very favorable towards mining, are extremely long. In fact, uranium is one of the few things that you can permit in the U.S. quicker than you can permit in Canada. Even in the U.S., though, it's very much what state are you in? Much like Australia, you can permit uranium mines in some territories, but not in others. Texas is one of the favored spots. In the U.S., the Nuclear Regulatory Commission back many, many decades ago saw the boom in nuclear power coming and said, we can't possibly review all the applications we're going to get. So they set up a system whereby certain states could apply to the federal government for permission to become an agreement state, or certification as an agreement state. And what that basically did was, through a period of years of training and education, and at a significant financial cost to the state, they were able to take on the regulatory rule book, if you will, of the feds. And no different rules than the feds, but obviously state governments have a bigger incentive to move things through permitting quicker than the federal government. That is, they'd like to see these assets on the tax roll. So Texas and Wyoming are notably the two states that are agreement states. That is, you permit your ISR operations without dealing with the feds. In Wyoming, it's probably 3 years, maybe a little bit less. In Texas, We've been very fortunate in our first project that we put into production in late November last year. It was 20 months to the day from our permit submission. And 20 months to the day, it's hard to get a parking lot in a major city permitted in 20 months. So we're quite pleased to be working in Texas. And we even beat that number on our second one, Alta Mesa, which will be in production any day now, certainly before the end of the second quarter. Other states, it could take you over a decade to permit in the U.S. So obviously it makes a big difference where you're dealing with and also the type of mining you're doing. If you're doing conventional mining, you have a much greater emphasis on reclamation. You obviously disturb a lot more of the earth, have tailings piles, surface material that is emitting radiation, things like that. So your regulatory environment in terms of not only finding it and building it and mining it and CapEx needed and all of that are, I guess, exacerbated by the long-term reclamation obligations. So here again, with in situ, you have a much shorter timeline to reclamation, much greater certainty of being able to walk away from it. You simply, what we do, we pump groundwater out of the uranium-bearing strata and add oxygen to it, re-inject it. The oxygen allows the uranium to go into solution, just like salt or sugar would into water. Pump it to the surface, ion exchange, the uranium, add more oxygen, keep rinsing and repeating over a period of a couple of years, will deplete a well field. And then for reclamation, you simply quit adding the oxygen, maybe a touch of carbon dioxide, but everything's quite environmentally friendly that we put down the hole. And once you stop putting that down, then the uranium quits dissolving, and a couple of years later, maybe 3, you're done with your reclamation. So much tidier package, if you will. So getting back to your answer, there's a lot of things affecting catching up on the supply demand, but actually the known number of uranium deposits is not it. I'm sure there's always room for more exploration, but there's a large number of deposits that are well known from the 70s and before. And what we really need is the permitting timelines to become increasingly favorable. And obviously that'll free up available capital, et cetera. So, and you've also got to realize another factor, we're short of talent. That's probably the biggest thing. And at enCore, it's our strongest asset is our team of very experienced personnel. But we've really gone 40 years, 45 years now, without a whole lot of new educated talent being applied to the mining industry or to the uranium extraction industry, because we just haven't had more than an occasionally good year or 04 to 07, 3 years. And it just hasn't been enough time to develop the new chemical engineers, mining engineers, et cetera, coming out of our technical universities to really properly staff the industry. So those are your real hindrances, I think. It's not a matter of finding uranium. Uranium's the 8th most abundant element on the planet, so there's a lot of uranium out there.
I'm really glad you brought that up, this idea that, economics is not necessarily the solution here, because I would argue it's the main thing that people say is, oh, well, if copper goes up in price, the cure for low prices is low prices, and then more people will mine it. And sometimes it's not that simple as just a high price, right? So,
well, that's right. I agree entirely. Just more clear, perhaps, with uranium that there are other factors. Obviously, price is important, but other factors are probably more important. Personnel, permitting, availability to capital, those sort of things.
right. The mining business is famously, a quote unquote difficult business. And it's a real world business that you're facing real world constraints. And sometimes I feel like that can sometimes be forgotten when we're looking at things purely in terms of price. I want to go back to this Uranium One business to kind of open up. You mentioned Russia a couple of times here. So you sold your first, and correct me if I'm wrong, but you sold the company that you put everything into in 2004. That went to Uranium One, right? And then Russia bought Uranium One. Wasn't that right?
Well, yeah, and it was sort of a long, drawn-out affair. It was a South African company we vended into. Uranium One was originally South African, had assets in Kazakhstan and Africa, and we were the U.S. end. And as they fell on financial hard times, Rosatom started making bigger and bigger investments and finally got control of the company. So it took a number of years, and during that time where they were coming more and more involved in the financial matters of the company was about the time I decided to head off and start enCore.
Okay, excellent. And what is your sense then? I mean, as someone who's spent, a large part of their career in the uranium market, like what is your sense? You're mentioning, there is a chance that Putin could, theoretically close off this, port in St. Petersburg or the exporting of uranium, especially with the legislation we were seeing in the US as a response to that legislation in the US banning uranium purchases at, I don't know, 2027, 2028. What is your sense of the situation right now from your perspective, particularly since you were, on the board of Uranium One?
Well, here again, I was on it before Russia was terribly active there. It just was the beginning of that. But I think pretty clearly now, if you look at it in an unemotional, unbiased viewpoint, and here again, I'm not a fan of Mr. Putin, but when Biden and the Senate and House proposed, and then Biden signed the legislation banning Russian imports, it most affected with the enriched uranium LEU that goes into the reactors. And that's because Russia has 44% of the world's enrichment capacity, way more than their fair share of conversion. What we deal with, yellow cake, is the cursory fuel, the starter material, if you will, and then it has to be converted and refined and enriched and then fabricated before it'll go into a reactor. All of that taking about 2 years. So their real stranglehold is on the the enrichment capacity. But nonetheless, they do control a great deal of the raw material that's being shipped as well. And the West tends to become quite smug and complacent on most of these things, and this isn't anything new, but it's getting more so, perhaps with less reason to be. But they clearly, over the Ukrainian situation, have been doing things that annoy Mr. Putin. And I'm not saying, obviously, Mr. Putin wasn't in the right when he moved into Ukraine, but facts on the ground are what they are. And I think before Russia actually came back through 10X and announced that they would require waivers within 60 days and payment in full for all contracts prior to delivery, and could not guarantee the delivery even after they were paid for, which is a financial term a lot of utilities simply can't bear. Everyone was discounting highly the fact that Putin would retaliate. And I've been saying since it started, there's absolutely no reason he wouldn't retaliate. I mean, his economic interest from nuclear material is about the same significance to him as $1.20 in the price of oil. So, it's his entire nuclear business is 2% or less of his oil and gas income. So really, he couldn't care less about it from an income point of view. And yet it was one of his sharpest sticks in his arsenal to poke the West with. And it's not just that. It's also the situation in Niger, where now it's quite clear that France's major source of uranium is now probably going to go to the East, that is to Russia, if not China. But the Wagner Group is in providing support for Niger. No indication they're going to be selling their uranium, which was 7% of the world's supply, to the West. So, there's a finite amount of uranium that's going around and around, but where it's ending up, being West versus East, is really the geopolitical question. And even Kazatomprom, the company that runs Kazakhstan, they keep talking about increasing shipments to the West. But at the same time, if you look at them carefully over the last year and a half, they've replaced virtually every executive position that was formerly a pro-Western leaning person with hardline Russian favoritisms. So that doesn't bode well for the future of Kazakh material, which is the world's biggest producer, lowest cost. And similarly, more and more of the Kazakh materials heading east to China. About a year and a half ago now, Cameco came out and announced that all of their enCore production was going to China. And it didn't really even catch many people's attention. But why would a Canadian company be sending their material to China when the West needs it? Probably because they weren't given a whole lot of choices. So those are the interesting geopolitical forces that are coming around, and we may very well end up with split pricing. It's back in the 70s, 60s, and 70s, there was always two different prices quoted for uranium. One was free world, one was Soviet bloc. We may not be far away from that again.
That is so interesting. I've been talking about that. We could have two prices for metals at some point as we see the world bifurcate. And so I'm just kind of curious, though, from your perspective, just to follow up on this notion, because I agree with you in the sense that it's quite a strong card that Putin could play should he decide to, let's say, cut off exports of uranium to the West. And so, in your opinion, how much damage would that do? Like, what would that mean? Would that be something that would be felt immediately? would that be something that if we put a kind of emergency permitting and this sort of thing that the West could recover from? Or would the West be out of luck, in your opinion? Like, how bad do you think that could end up?
You wouldn't see anything immediate. I mean, of the number of utilities in the U.S., obviously the U.S. is probably most vulnerable. France is probably fairly vulnerable as well. But there is material around. It's not that all the different nuclear utilities have the same amount of stockpile. Some are running pretty close to the edge. Some have, a number of years of material available. It's not clear if push comes to shove and if the, enriched material coming back from Russia were to be eliminated overnight, would some of those companies either freely or be coerced to share with their neighbors, or would the federal government get involved? I don't know. The one thing I can tell you is the West doesn't plan very well, ever, but it reacts incredibly well. And usually they wait for a problem and then they're pretty good at fixing it. So whether that would take the form of, a push on permitting, who knows? Currently in the U.S., it's hard to see that push coming to light. Here again, they talk out of both sides of their mouth. They talk constantly about wanting to, help the nuclear industry along, while at the same time they continue to make massive land grabs, removing it from the public domain and eliminating mining or uranium production from it. Like politics, it's, which day do you want to believe whatever they're saying?
Okay, yeah, no, interesting. And, I have a whole theory on that Sprott thing, because I think that came in through Canada. Like, I think that just flew under the radar, is sort of my impression, because do U.S. and Canadian governments really want a big speculation vehicle on uranium?
The Sprott factor is certainly can't be overlooked in terms of the spot price, and they've come in and soaked up 60 million or more pounds. And this was excess material that generally had been going back and forth between traders and that sort of thing. And it's really, really, their timing was excellent getting into the market. They've taken the slack out of the market. Obviously, they have not been anywhere near as big a factor this last year as they were when they first came on. But a lot of that's got to do with their ability to raise money. It have to be a premium to NAV. And just hadn't been at that point nearly as often it was on the way up. But there'd be a different market had Sprott not come in and, taken the slack out of it. For sure. It'll be interesting to see what happens to that if supply interruption does evolve with the Russian situation, if they'll, realign their charter to make some of that material available, or if the governments will start leaning on them. It'll be very interesting to see. But in the meantime, they've been a real key building block of the uranium price and the market we find ourselves in now.
Okay, excellent. This has been absolutely fascinating. So just as we wrap up then, just a final question, big picture, what are your final thoughts on the uranium market as we are? And is there anything else that you think should be mentioned that we haven't mentioned here?
Yeah, I really think we're at the very beginning. People often ask, what inning are we in? And especially when they, we had such a great run up here in the past couple of years. Are we in the eighth inning yet? It's like, no, I think we're still in batting practice. I think we've got multiple decades ahead of us of considerably above average growth. I think it certainly favors those select few of us that are in production already, or can be very quickly, obviously with one producing asset currently and another one here within the next week or two at Alta Mesa in Texas. enCore's in an incredibly good position with no debt, or about 80 million in cash with revenue to really take advantage of this. But I think it's a long-term game. And I've equated it to being in the oil and gas industry in 1950. We've got a number of great decades ahead of us. Now, that doesn't mean every year is going to be a winner. It doesn't mean every 6 months is going to be easy. There may be some. Right now, oil is about $80-90 a barrel, and it wasn't that many years ago. They were paying you to take it for a short period of time in contango. No industry is going to be bulletproof forever, but I think that by and large, being in the nuclear field over the next decades for the long-term player is going to give them some of the best results possible and well beyond average returns. And it's going to favor the steady, concentrated, diligent effort towards increasing production and doing it responsibly. And that's where we see enCore as America's clean energy company, established early and continuing to grow both generically as well as through acquisitions.
William Sheriff, Executive Chair and Founder of enCore Energy, thank you for joining us on this week's Northern Miner podcast.
Thanks, Adrian.
And thank you once again to Midnight Sun Mining for sponsoring this week's episode of the Northern Miner podcast. And a big thank you also to William Sheriff for sharing his insights and experiences in the uranium mining sector. A fascinating discussion. If you enjoyed the show, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.